Hello. So in our previous video, we have gone through the introduction of final accounts. Now this video is in shortest form, which will enable you to revise at the earliest. So in the process of accounting, after observing the transactions, those transactions will be recorded in the form of general entries, and general entries will be posted into ledger accounts, and the ledger balances, whatever they're utilizing them, will be preparing trial balance, and the balance from trial balance will be considered in preparing the financial statements, that is trading, profit and loss account and balance sheet. Those financial statements will be called as final accounts. So the moment we say final accounts, we'll be preparing trading, profit and loss account and balance sheet. Okay, so trading, profit and loss account is equal to other ledger accounts, where while preparing it will be using the words to and by. So if we are writing anything at debit side, we'll be writing with the word to, and if we are writing some balance or credit side, we'll be writing using by. Okay, so in the first half of the statement is called as trading account, and the second half of the statement is called as profit and loss account. In trading account, we'll be considering all direct expenses. What are direct expenses? Expenses incurred in factory, or expenses related to production, or manufacturing expenses. So all manufacturing relevant expenses will be recorded at debit side of trading account, and what are the portion made by selling it, what are the income we get is called direct income. So sales is direct income, which will be recorded trading account trade side, and by finalizing trading account, we'll be getting gross profit, and that gross profit will be brought forward to P&L account, and the second half of the part of statement is called as P&L account, that is profit and loss account. In profit and loss account, what are the expenses and incomes which we have not considered trading account will be considered here. That is, all direct expenses were considered trading account, right? So indirect expenses will be considered in profit and loss account. What are indirect expenses? Expenses incurred in office. Okay, are expenses incurred to administer the business, to organize the business. Okay, so all administrative expenses or all office expenses will be written at debit side of P&L account, and all other incomes, that is other than sales, will be recorded at credit side of P&L account. What are those other incomes? Like salary received, commission received, rent received, dividend received, all such sort of incomes will be recorded credit side of P&L account. And by finalizing the P&L account, either we'll be getting net profit or net loss, which should be brought forward to balance sheet. And the final financial statement is balance sheet. Okay, it is a statement in which we don't use either to or by while recording the balances. At the first, at left side we'll be writing all liabilities, and right side will be writing all assets. What are liabilities? They are the debts due by the firm, amount due by the firm, all payables. All payables will be recorded at liability side, and opposite to payables is receivables. All receivables will be written at asset side. Along with receivables, what are the properties possessed by the firm? Okay, what are the properties, what are the assets possessed by the firm which are under possession of the firm are recorded at asset side. And finally, when we do everything correctly, after posting and finalizing, the balance sheet will tally. That is, all liabilities, that is capital plus all other liabilities, is equal to value of assets. Hope you understood the essence of final accounts in nutshell.